Live from Singapore, this is Insight with Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. A slowdown in U.S. jobs reinforces bets on a Fed rate cut and weakens the dollar. That's prompted China's most forceful signal since 2022 to slow the yuan's gains. Bank of Singapore's global CIO, Chia, joins us with her outlook, maintaining a risk-on stance for 2026 on expectations of lower rates. Big Tech's trillion-dollar race to build data centers is raising alarms on overexposure, with banks weighing ways to offload risk and investors questioning sustainability. We'll put those questions and concerns to NTT Data, one of the world's largest data center operators. Its president, CEO, and chief AI officer, Abhijit Dubey, will be joining us ahead. And as Russian President Vladimir Putin is set to arrive in India, Prime Minister Modi faces a delicate balancing act between one of the country's most trusted partners and the U.S. How can Modi avoid Trump's ire? We'll ask former U.S. State Department official Anja Manuel, who joins us in the next hour. Here's a quick check on the markets. We're seeing a mixed picture in Asia today, despite a positive lead-in from Wall Street overnight. The yuan in focus after China set its daily reference rate at a level that was significantly weaker than estimates. The PBOC's so-called fixing stood at 7.0733 per dollar, suggesting that the central bank is aiming to limit gains in the managed currency. Meanwhile, traders are also weighing further evidence of a cooling U.S. jobs market, and ADP report showing that U.S. companies shedding payrolls in November by the most since early 2023. The data further boosts bets on a Fed rate cut next week. Well, speaking of the Fed, the Financial Times says bond investors warn the Treasury Department of concerns over Kevin Hassett's potential appointment as the next Fed chair. The report claims investors are worried he'll cut rates aggressively to please President Trump. Let's get more perspective from Chia, global CIO at Bank of Singapore. It does seem like the market's already factoring in fully that rate cut this month, but you say not so.
Well, I think the data is the key right now, right? I think Fed Chair Jerome Powell said very eloquently in October that when you're driving through a fog, you have to slow down. And I think that fog is slowly lifting. We're getting some data like the ADP report that you mentioned as well, signaling that jobs perhaps is on the weak side. But what's still a big question mark is whether inflation numbers could be the sting in the tail. So while, very much like the market, we are expecting a rate cut in December, I think where we're probably there is still a tail risk in terms of inflation. Now, of course, the BLS numbers for jobs also comes out only after the Fed meets next week. So again, that data point would be somewhat delayed. So, the Fed members have actually also guided very much strongly towards a rate cut. So I think that's pretty much in the bag. But, you never know in this market. We're flying blind with a lack of data.
You never know. And some people are still suggesting a 50 basis point cut might still be possible. Is there a possibility of that happening at all?
I think that will be a tail risk at this point because I think what is really key, and we also all know, it's regarding the appointment of the next chair. That will be a critical thing to watch for next year. We had expected that chairmanship to be appointed by this year, but now Trump has guided that it's probably next year. So again, there's a big question mark there. But I think what's important for investors now is that as far as the overall sentiment is concerned, it's very constructive of risk assets. As to the timing, the quantum, those are the variables now. But I think the general direction is pointing towards a rate cut scenario.
Poly market suggests Hassett is the man. The bond market says, be careful, we're not really for this man. How might this play out in terms of yields going forward?
So what we've seen overall is that actually duration is now the key for a lot of bond investors, right? We cannot assume that the bond markets are going to be benign and predictable. So that's where potentially as investors, there's no need to panic, but at the same time to be very cautious in terms of maintaining and actively managing duration as a response, right? I think it's always key, not just what the market expects, but also in terms of how we prepare for the eventuality. So we do expect that rates will remain very volatile going into the appointment of the Fed chair. So expectations on rate cuts, couple that with the noisy data, I think we are positioning our portfolios in such a way that we are prepared to manage duration very actively. The other issue for bond markets, of course, is that spreads are already very tight. So there's very little room for surprise in that sense. So we're relatively cautious of fixed income, so very much invested, but actively managing those portfolios.
But where do you find yield? I mean, where best to find yield right now?
So we're maintaining a high-quality bias in bond portfolios right now, both investment grade and selectively in high yield. In fact, Asia still provides some of that potential in terms of high-quality issuers still available paper in the market. So I think that's where we, again, take a very diversified approach in fixed income across developed markets as well as emerging market. So we've seen also emerging market has done very well this year. That's where we spend a lot of time on the credit selection and really zeroing down on relative value trades within the fixed income portfolios.
As you said, emerging markets have done really well because they have gotten the house in order. The question is really whether that pace of gains in emerging markets can persist in 2026. Some say yes.
Yeah, absolutely. I think if you look at the fiscal positions of broader emerging markets, it's actually not as it's in a healthy state, right? I mean,
what a surprise, right?
Relative to developed markets, it's an ugly contest out there. But emerging markets have held up very well, and case in point in EM equities, right? Asia has really far outperformed even developed markets. I mean, everyone talks about the all-time highs on the S&P. But Asia's up 30% for the year in US dollar terms. Broadly, of course, North Asia drove the performance, but that's really a stellar showing. I think they've been relatively under-owned and underappreciated as we came into the beginning of the year with all the concerns over how tariffs might affect the EM and also Asian countries. But it has gone to show that actually keeping that diversified approach, regardless of the short-term noise or even policy concerns, can actually help us on a portfolio basis.
We're hearing more regularly the ASEAN markets are the ones to be betting on in 2026. Indonesia, case in point. Malaysia, another case in point. Is that a view that you share?
Yeah, so I think the economy and the market sometimes can bifurcate. So the issue, I guess, is as the North Asian markets have offered a lot of tech exposure, or AI proxies, if you like, from US. And so that's why what's driven Korea, Taiwan, and China to some extent on the technology standpoint, there is a lot of exposure in North Asia when we talk about the AI theme. Now, in Southeast Asia, we perhaps lack that sort of play, and arguably India as well. So India is perhaps one of the markets to watch as well as to the underperformance and the perception that somehow some of the jobs in Southeast Asia as well as India could be cannibalized by AI innovation. I think that is probably overdone. There is potential for companies in Southeast Asia to also adopt AI. So instead of AI on the upstream in terms of exposure, we should start to focus on which are the companies, even in Southeast Asia as well as broader Asia, that can accelerate adoption and really monetize AI investment. I think that's potentially a sort of underlying driver. Plus, I think for some of the countries, for example, Malaysia is benefiting from AI investments, as India is as well, in terms of data center build out, the availability of power as well as infrastructure. Those are going to be very strong points for Southeast Asia as well.
All these countries that you've just mentioned are vulnerable to what happens in China. And we're seeing how China is managing its currency pretty tightly today, setting its fix at a much weaker level than anticipated, trying to manage the currency. Perhaps putting a lid to it inching towards that psychological 7 level. I mean, how might this play out in terms of the currency market in this part of the world?
Yeah, I think at the end of the day, we go back to the first point. Let's ask the Fed. So I think the US dollar is the key driver or lever, if you like, that's going to affect all EM currencies at this point, and Asian currencies, including the yuan and Japanese yen as well. So I think to the extent that we've seen a huge correction in the dollar, DXY was down at its peak, down 10%, and now maybe 7 to 8%. We think that pace of sort of weakening of the US dollar will perhaps slow down towards 2026, but still towards a weakening bias. So you've seen also Southeast Asian currencies, including the ringgit and so on, have actually strengthened on a relative basis. So I think it's too early to call that sort of currency weakness for the region right now.
Watch the Fed. Jean, hang tight. Jean Chia, Global Chief Investment Officer of Bank of Singapore. She's sticking around. When we come back, we'll get insights on tech as Morgan Stanley and Anthropic flag fresh risks for the AI sector. Keep it here with us. This is Bloomberg. Welcome back. You're watching Inside. Big tech is pouring trillions into AI data centers, but Anthropic CEO Dario Amodei warns the risks may outweigh returns. Anthropic itself pledged $50 billion, while rivals like Meta, Google, and OpenAI spend heavily. Morgan Stanley projects $3 trillion in cloud infrastructure by 2028, much funded by debt, and is already seeking ways to reduce the bank's exposure. Mike Kontopoulos, the deputy CIO, Bernstein, says much of the euphoria around AI could be misplaced.
I think investors are starting to realize that this is starting to look a little bit too egregious in terms of the spend on CapEx. So much of what we've seen around AI and the promise around AI is really misplaced euphoria around liquidity.
Jean Chia from Bank of Singapore is still with us. Here we are, debating whether or not they're spending too much. Are they?
So the way I look at it is like game theory, right? So it's a pay-to-play game now, and it's a race in terms of the capacity build-out. So the pay-to-play price tag, unfortunately, is a big one. It's 100 billion and above. So many of the hyperscalers are already pouring a lot of capex into AI. Clearly, not all of them will be winners, so we have to be cautious that, indeed within that ecosystem, there will be winners and losers, and some of them, as they exit the game, then the larger will just become stronger as well. So there is, I think, also I would caution against, making sort of very binary decisions right now of I'm in or I'm out, but rather to look at being invested in AI in a broader manner. The other thing I would caution is also we are in a slightly more mature phase in the AI, equity boom, if you like, and that has two implications. One is that over exuberance means that expectations are already very high, so the chance of a correction due to a negative surprise or disappointment is high. Secondly, we're also seeing overlapping exposures in client portfolios. So whether you own an S&P ETF or you have a US fund or a tech fund, or now even in bond funds, because the hyperscalers have also started to issue debt. So instead of just looking at the earnings figures, you really also have to look at the balance sheets of these issuers as well over time and how indebted they've become. So in a client portfolio, we're very cautious on clients that may be overexposed, even though on the surface it may seem like they're actually broadly diversified. The AI exposures are now becoming concentration risks as well. The other sort of aspect, I think, is broadening one's exposure. So instead of just looking at upstream, I think we are also looking at underappreciated areas that are beneficiaries of the capex. For example, utilities and materials, very under-owned and sort of boring sectors. But indeed, that's what needs to be built, right? In terms of power and renewable energy supply and so on. And perhaps the AI game is being fought in energy sector and renewable energy sector. So that's another sort of area that we think could be interesting. The other is, of course, AI application. So China is actually encouraging companies and also individuals to be, sort of get up to speed in terms of AI adoption. And India and so on, and also emerging markets, like I mentioned, AI adoption could be the answer as well in terms of monetization of this AI revolution. So I wouldn't say that, it's a bubble, get out, but rather, look at broadening exposure, managing those exposures, and looking at underappreciated areas, including in private markets.
You talk about how it should not be a binary decision, in or out. Some say inevitably you need to play the AI game. The question really, when you take a look at your portfolio, right? I mean, how much should you be holding AI and tech in that portfolio? Would 40% be too much?
I think we have to look at, of course, the composition of the indices at this point, but that's not a good indicator because right now you can see that the hyperscalers, the Mac 7, are already at 30% of the S&P. We are very much in favor of looking through indices and looking more at the overall sort of structural change that we're seeing across sectors. So while you maintain a diversified sector exposure, you may still be exposed to the underlying trend, which is positive in terms of earnings growth, productivity gains, and to the extent that the companies involved are actually going to, at the end of the day, see margin expansion, back to fundamentals. So I think it's not so much a thematic right now. I take the same approach with sustainability, with AI, with demographics. It's not a theme. It's to the extent to which it can drive corporate earnings and drive sort of earnings growth that we still ultimately come back to. And for the issuers as well, the health of a company ultimately is a sum of these factors.
And valuations as well.
Obviously.
And when you take a look at valuations that we're seeing in the US right now, it doesn't seem like it is the place to be. I mean, is it wrong to think that you get better value, better returns if you take a look at the Chinese players?
Yeah, so I think the Asian players definitely have, room to go in terms of from a valuation standpoint, but we're also seeing the US companies actually deliver growth in terms of margins, and to some surprise, while they're already very high, they've actually sort of cracked through that. So from a PE basis, some companies are actually looking cheaper than they were before. So I think it's important to see valuations more from a forward basis, and also the promise of further innovation, both from US as well as China. So I think it's no longer a binary game as well as to US being the AI play, but rather Asia also becoming an AI play that's broadening out.
How are you looking at the competition between the US and China? We've had the likes of Jen-Hsun Huang weighing in on the issue, saying, you know what, when you take a look at who's going to win, it's going to be the country that can actually power, the data centers. And he's alluding to the fact that China could be winning this game. How is that factoring into your considerations?
So it's interesting that if we take a longer-term view, at Bank of Singapore, we actually have a publication called the Super Trends Report. And we're looking at structural trends that will go not just for the next year, 2026, but beyond to 5 years. And some of these trends are actually pointing towards Asia playing a bigger role within portfolios as well. Case in point, yes, innovation ultimately arises where you see attraction of talent and an environment that is conducive for intellectual capital, scientific research, and also the investment in R&D. So that is beginning to sort of have various nodes outside of the US, including Europe and Japan, as well as Asia, Hong Kong, China, and Singapore. So we think that actually we start to see a 2-3 track economy across the world where investors cannot afford to ignore anymore. So indeed what you said, Jen-Hsun Huang's point about whether it's the physical infrastructure or the intellectual infrastructure, and that also has attracted demographic shifts, which are structural trends where talent is no longer concentrated in the US, but now has found other homes, which goes to show that we need to look beyond the US for innovation. in robotics, in humanoids, in industrial robotics. Japan and China actually lead in many of these areas. So, it's too simplifying too much to say that U.S. is the heart of innovation, which has been true for many, many years. We're starting to see that actually diversify. So in a portfolio context, I think what we are very keen to explain to clients is we need to look beyond that continuum of equities versus bonds versus alternatives, but rather looking at if we want to achieve long-term real returns and resilient returns, we need to really invest across that continuum into private markets, because some companies are no longer, listing as early as and allowing their companies to mature. So we do see opportunities in private markets, for instance, and also geographically across the spectrum.
And of course, speaking of robotics, Trump says U.S. is now all in on robotics. Jean, always a pleasure. Jean Chia, Global CIO at Bank of Singapore. Now, French President Emmanuel Macron and Chinese leader Xi Jinping met in Beijing this morning. The two leaders likely to discuss a range of issues from trade to Taiwan. Let's get more from my China correspondent, Min Lo in Hong Kong. It is a crucial trip for Macron, right, Min?
That's right, and we saw the live pictures about slightly over an hour ago when when Macron was received at the Great Hall of the People and he met with President Xi. Those talks, we're not sure whether they have come out from the talks. We're still waiting for any media lines or readout coming from the Chinese state media, but I'll certainly be watching out for any concrete deals that would come out of this. The French side did hint at potential deals around transport and energy, and you can get an idea of what is on the agenda. If you look at who has been accompanying Macron on this trip, he has the head of Airbus who is there. There is the head of Danone and Remy Cointreau. That is a cognac company. So we know that that Macron will probably want to push China to lift those tariffs on French cognac. Of course, there are the ongoing probes on French pork and dairy as well. Those were in retaliation to the EV tariffs that EU has imposed, and France had been one of those key countries that was instrumental in shaping the European opinion that eventually led to those tariffs.
Min, what are you watching out for from the readout that we'll get from both sides?
Yeah, we'll be watching out for the tone, for the substance. I mentioned earlier about those deals, any concrete deals, but the tone as well, because we know that, for example, ahead of this trip, Wang Yi had called the diplomatic advisor of Macron to send him a message about Taiwan. And one of the earliest foreign ministry statement that came out yesterday, the first day of the trip, also was around Wang Yi's chat with his French counterpart, calling for support from France when it comes to Taiwan to basically prevent Takaichi from creating chaos in this region and repeating the mistakes from World War II. So that seems to be a very important issue for China. But in terms of any concrete outcome there, I believe this is where Macron will likely not want to wade into any controversy here. He will likely still continue to call for a status quo.
Interesting to see that his visit is yet again being overshadowed by the issue of Taiwan. You got to wonder how he will respond to it this time round. Perhaps, the pressure from China.
Yeah, that's right. And it's an important balancing act that he is juggling here, because I mentioned earlier that call that Wang Yi had with his diplomatic advisor. Soon after that call, which took place on Wednesday, the diplomatic advisor also then had a call with the Japanese national security official, which then, France and Japan then talked about expanding security cooperation and, working towards a free and open Indo-Pacific. So both sides getting the narrative lined up there.
Min Lo, thank you so much for that. Plenty more ahead. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. Here's a quick look at where markets stand, with China going to lunch break and Japan coming back online. Stocks in the region weighing more evidence of a slowing U.S. job market after the ADP reported that U.S. companies shared payrolls in November by the most since early 2023. The data further boosting bets on a Fed rate cut next week. The CSI 300 index currently up 0.3%. Of course, we're keeping an eye on the Indian rupee, also just coming online after breaching the closely watched 90 per dollar level on Wednesday. And Nvidia CEO Jen-Hsun says he's unsure whether China would accept the company's H200 AI chips if the U.S. relaxes restrictions on sales of the processors. Earlier this year, Nvidia won approval to sell its less powerful H20 chip in Beijing, but China told potential domestic customers to shun the product. Despite the setback, Huang says he's still confident about Washington's AI dominance.
Going toe-to-toe against anyone, the American technology industry has nothing to fear. We are mighty, we're fast, we're inventive, we'll take anybody on. In the case of China, we shouldn't concede the entire market to them. They're formidable, but conceding that entire market, we ought to go compete for it.
As big tech commits trillions of dollars in the race to build artificial intelligence support systems, including data centers, Anthropic CEO Dario Amodei is warning that AI firms may be taking on too much risk. At a New York Times summit, he said the industry faces a real dilemma, balancing costly investments with uncertainty over the returns. Still, Anthropic itself has pledged $50 billion for its first custom data centers in the U.S. as bigger rivals Meta, Google, and OpenAI ramp up spending. However, the scale of investment is raising alarms in finance. Morgan Stanley strategists think major cloud companies will spend about $3 trillion on data center infrastructure through 2028. Much of it funded by debt. The bank is already exploring ways to offload some of its exposure, including a significant risk transfer tied to AI infrastructure loans. Well, Japan's NTT Data is already one of the world's largest data center owners, and now it is expanding its global footprint with 6 new AI-powered hubs, including 4 in India and 1 each in the UK and US. Joining us exclusively, NTT Data President, CEO and Chief AI Officer, Abhijit Dubey. Abhijit, good to have you with us. So big plans for NTT Data. First off, let's weigh in on what's been said about the massive spending, capacity building. Is there risk we're just building a bubble and that bubble is about to burst?
There's no doubt that we are in a bubble. I think the bubble will likely burst sometime in the next 12 months. Because what's happened is we are over-deploying data center capacity relative to the adoption patterns that we see in enterprises. And we are a very unique company because we operate in the data center business, and we're also in technology services, helping our clients transform using AI. So we see both sides of the demand and supply equation. But long-term, there is absolutely no doubt that AI tech revolution is the biggest that probably we have seen or will see in the century. And so even though there may be a short-term bubble burst, longer term, I think the secular trends are very, very positive.
How huge is this bubble? I mean, how worried should we be when you take a look at real usage and speculation? Where are we with that?
I think as I said, I think it's a short-term bubble. The infrastructure commitments that have been made, in the long term, we will need that infrastructure. But the enterprise adoption hasn't quite kept up to that build out and that commitment. And the two will need to match up at some point in time. My view is that divergence of the supply and demand is increasing, and that we will see in the next 12 months a reckoning that needs to happen. But after that, we will see the enterprise adoption catch up. And therefore, the two curves of demand and supply actually start matching up.
Abhijit, hang tight. We're showing live pictures out of Beijing where Chinese President Xi Jinping and French President Emmanuel Macron are delivering a joint press conference. At this point in time, I believe we are listening in to what's happening in Beijing. Oh, we'll go live to Beijing and listen in just slightly later. But as you know, this is a crucial meeting between the two leaders. It comes at a crucial time when trade has been upended pretty much by Beijing, and we know that European countries, the likes of France, Italy, are trying to draw on India and boost trade between the two sides. China, of course, seeking support from France as well when it comes to issues including that of Taiwan. That is a controversial issue. And we've seen and expecting Xi Jinping to get support on that issue from Macron. Just to continue our conversation, Abhijit, when it comes to the AI infrastructure, talk to us about how much commitment you're seeing from your own clients.
I think on the data center infrastructure side, obviously a lot of the hyperscalers are our customers, and we see incredible commitment. And we haven't seen a real slowdown in that commitment over the last 6 months. But on the enterprise adoption side, the actual users of the AI technology, that is increasing, but not at the same pace that is required to have those supply and demand curves match yet. But my sense is that after the next 12 to 24 months, those will start to converge.
And given the optimism long-term, Abhijit, I mean, what's your own expansion plan at NTT Data?
Yeah, so we continue with our expansion plans. For instance, in India, just in data centers, we've deployed $3 billion capital dollars to date. We intend to deploy another $1.5 billion over the next few years, just in India. Globally, it's going to be about $10 billion over the next 3 years, and perhaps more. So we remain pretty bullish. We always take a long-term mindset, a through-cycle mindset through any of these short-term bubbles and bursts. So we remain very bullish on that. And the same is true on our enterprise technology services business. We remain quite bullish about the prospects in that business. Of course, the portfolio has to evolve with AI enablement. New AI native services have to be launched that we are all working on, like the launch of these 6 cyber defense centers that we have just announced. But we remain bullish overall on both the infrastructure side as well as the technology services side.
Japan has also big plans when it comes to, being a data center hub. I'm just wondering, what do you make of the plans? Can those plans materialize without perhaps, more nuclear power coming on board?
I think we will need alternative sources of power. Nuclear is one of them. There's obviously a lot of innovation also happening in terms of small modular reactors and other technologies as well, including hydrogen. Now, a lot of them are not ready for commercial deployments yet, but we anticipate in the next 5 years, we will start to see alternative forms of energy come into the market, not just in Japan, but also globally.
What would it take for you to perhaps be more committed to the business in Japan?
We are already very committed to our business in Japan. So, we are all in.
When it comes to those, we talk about the need for the nuclear plants, the likes of Tomari reactor, and let's talk about it being restarting. What impact do you think that might have in areas like Hokkaido?
I think, we have a global power supply crunch, right? So, it tends to be localized in the markets. In some markets, we may have an overcapacity. In some markets, we have undercapacity. So in any market where there is undercapacity and we can activate new sources of power, that's a net positive for the whole industry. So we generally try to follow all of these developments, and we are quite bullish to the extent that these actually come to fruition.
We heard from Jen-Hsun saying that the country that will win this AI race will be the country that's able to power the data centers. How does Japan sit in comparison to the likes of the U.S. and China?
I think Japan is reasonably well positioned. I think it's in Japan, especially in some of the core markets, it's not just a power issue, it's also a space issue, right? So, especially if you look at Greater Tokyo as an example. So we also have to solve the space issue in addition to the power issue. But I'm pretty confident that we will get there in Japan as well.
What's driving that optimism?
We already have plans on what we intend to deploy, and we already have sort of a 3-year to 4-year roadmap of land and power that we are looking at.
Some say that despite having big plans in AI, entity data has been pretty quiet about its scale compared to perhaps competitors like SoftBank. Why is that? Why is that part of the strategy, Abhijit?
I think that's part of the culture. We've always been a little bit unassuming. We are a $30 billion IT services and technology infrastructure business. We're actually one of the top 5 in the world. And it's not a very well-known fact. But, we take that. I think it's an opportunity for us to really focus on what we do best, which is build out world-class AI infrastructure and really drive impact for our enterprise clients through any tech-enabled transformation. It used to be digital, now it's AI.
What kind of growth are you anticipating in the coming years? What is sustainable?
Yeah, we are anticipating high single-digit growth. I suppose in our data center business, of course, we are looking at 20% plus. That's what we have grown for the last few years. We anticipate our growth to continue in that trajectory, if not faster. And in our technology services business, even though the industry is roughly flat, perhaps 1 to 2 points of growth, we anticipate taking market share plus expanding the pool, and we anticipate at least high single-digit growth over the next few years.
And what's the biggest risk to your projections?
The biggest risk to our projections is what we are seeing right now, which is the uncertainty that comes from geopolitical fragmentation as well as macroeconomic uncertainty. And when uncertainty happens, our clients tend to stop spending. And that's the biggest risk to our business.
There's been a lot of talk about sovereign AI in Japan. What role do you see NTT playing in terms of, getting to that goal?
Yeah, we see a huge opportunity in sovereign AI, by the way, not just in Japan, but also outside of Japan. Remember, we're a $20 billion business outside of Japan. So especially in this new geopolitical world that we see a lot of our clients desire both data sovereignty, but also, more importantly, strategic autonomy. And this is true in Japan. It's true in a lot of markets in Europe and even in Southeast Asia and even in markets like India. And we see that as a huge opportunity for us because we are the only full stack player. We can deliver data centers, we can deliver on-premise, private and sovereign AI infrastructure, and we can deliver the entire AI stack in any market that is required. We are actually one of the only players who can do that. So we think that's a huge opportunity for us. In fact, that's why we were one of the first global systems integrators to partner with Mistral, which is a European large language model player, precisely because of that.
Abhijit, let's talk about cybersecurity. Japan has been the target for, of ransomware recently. I'm just wondering, what does it say about the weakest links, in the supply chain in Japan? What's your own take on that?
I think it's not just a Japan statement. I think it's a global statement. Generally speaking, a lot of enterprises have done a decent job on managing IT security. What we haven't done, and most of our clients, that's what we hear, is really manage the OT security. So we see a lot of focus now on increasing cyber resilience and the cyber posture on the OT side, especially as we get IT and OT environments to be much more integrated in the future. And that's what we are doing in our autonomous cyber defense centers. We're really integrating our IT and OT security capabilities.
In terms of the regulatory environment, does it need to be tightened? What do we need to see?
I think we need to see a little bit more standardization globally in the AI regulation. As NTT, we're a strong advocate that AI needs to be regulated better, not just on areas of like deepfake, but also in terms of how you manage ethics guidelines, et cetera. In the absence of global standardized regulations, we have built our own governance frameworks, which are much more stricter than perhaps what regulations would imply. But it would be helpful for players like us to have much more standard regulations globally.
We know that a lot of Japanese companies actually rely on legacy systems. What do you make of that? And how much of a risk is that to your own company?
Well, our company, we've modernized our systems. We continue to modernize at speed. But you're right that in Japan, there's a lot of legacy systems. And by the way, that's not, again, a Japan statement. We see that generally to be true. There's 60 years of legacy in a lot of enterprise environments. There is a real push to modernize legacy environments where it makes sense and or to harden the security posture of those environments. And that, again, is a net positive for companies like us in terms of business opportunity.
Abhijit, as we look to 2026, what are you most upbeat about?
Well, we think the AI trend is here to stay. We may have a short-term bubble burst, et cetera. And what we are most excited about is the reinvention of the technology services industry, because our industry has pretty much been driven by a linearity of business model where you add more people, you generate more revenue. And I think the future is going to be about adding new sources of revenue that are non-linear in nature. And that's the thing that is most exciting for me personally and for us.
Abhijit, thank you so much for your time today. Abhijit Dubey, President, CEO and Chief AI Officer at NTT Data. We're keeping an eye on the Indian rupee falling 0.3% versus the USD, touching a new record low, 90.4175 versus the USD. We continue to see that slide in the Indian rupee. It is already the worst performing Asian currency year to date. Of course, we've seen a lot of foreign funds making exit from the stock market, which is not helping sentiment when it comes to that currency. We're also keeping an eye on that 30-year government bond auction in Japan. It's drawn the strongest demand since 2019 as elevated yields wooed investors despite lingering fiscal concerns. Of course, this comes on the back of that solid 10-year auction as well. Japan 30-year bond bid cover ratio 4.04 versus 12-month average of 3.35. So both in terms of the 10 and 30-year auction have pretty much attracted stronger than expected demand. Plenty more ahead. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. Let's do a check on Indian markets. Been trading for about 5 minutes now. It is losses for the Indian benchmarks in the first 5 minutes of trade. The Sensex down about 0.1%. The Nifty Bank Index also in negative territory. Of course, front and center is the Indian rupee, the worst performing in Asia year to date, testing yet another record low. Persistent outflows, weak FDI, delay in trade deal with the U.S., and also, of course, that uncertainty over the tariffs that the U.S. will be imposing on India, all weighing on that currency, prompting an exit when it comes to those foreign funds. Now, the Trump administration says it will increase vetting of applicants for H-1B visas with a specific instruction to reject anyone who was involved in censorship of free speech. Our senior editor, John Harney, joins us from Washington. John, what exactly is the State Department asking for?
This directive, if you will, was sent out to U.S. missions overseas in a cable. Now, this whole business about censorship is not well defined and is quite broad. It doesn't say what the censorship, what kinds of censorship would not allow, would reflect badly on applicants, but it's part of the larger agenda of the Trump administration to restrict legal immigration as well as, of course, illegal immigration. These visas, new applicants to these visas, earlier this year were told, or companies that want to bring in workers from these visas were told that the new applications are going to cost $100,000. So this is yet another policy, or yet another policy that technology companies will have to be watching out for as they try to bring in skilled foreign workers.
As you suggested, John, these are really aggressive moves. I mean, who's likely to be the most hit? I mean, we've been talking about how, India could potentially be on the receiving end. How might this play out?
Well, it's not clear what countries might be affected. It seems that that the diplomats overseas are going to be asked to look at, say, LinkedIn profiles or social media, and for perhaps opinions that were expressed by potential applicants, and that might opinions that might show that they cannot come to the United States.
John, what else are we looking out for? I mean, this may not be the end of it.
Oh, I'm sure it won't be, because and the technology companies and other corporations have become alarmed about this, but so far they have not been able to get any pattern, not being able to establish a pattern or a standard as these policies, or not even policies, but directives and opinions that seem to be coming across from the Trump administration. Now, I should point out that President Trump and others in the administration have become much more aggressive since the killing, since the killing of a National Guard soldier right before Thanksgiving here, and the wounding of another by suspected. The suspect is a migrant from Afghanistan who was part of the American, who helped the American troops during the war there.
John, thank you so much for that. Bloomberg senior editor John Harney there. Here are some other stories we're following. Russian news agency Interfax says President Vladimir Putin will begin his India state visit with a closed-door meeting with Prime Minister Narendra Modi. Putin is arriving in New Delhi later Thursday, marking his first trip to the nation since Russia's invasion of Ukraine. The visit is expected to underscore the two countries' defense and energy ties and comes as India still struggles to finalize a trade deal with the U.S. The European Union has proposed two options to replenish Ukraine's war-strained budget: a loan backed by frozen Russian assets or one guaranteed by the bloc's own finances. Belgium has already rejected the Russian assets plan, citing concerns it could be forced to repay the loan alone. These developments come as the EU looks for ways to fund Ukraine after the US withdrew its support. And here's a look at our guest coming up next hour. Ionic Asset tells us why they see the AI bubble leaking some air, but they don't see a meltdown. And Aspen Strategy Group discusses French President Emmanuel Macron's visit to China. Much more ahead. Keep it here with us. This is Bloomberg. Welcome back. You're watching Inside. Here are some stories we're following. Bloomberg has learned that Meta has poached Apple's most prominent design executive as the social network accelerates a push towards AI-enabled consumer devices. Alan Dye had run Apple's user interface design team since 2015. Sources say it's replacing Dye with longtime designer Stephen Lemay. Microsoft shares fell in the regular session after a report of weaker demand for some of its AI tools. The information says several divisions have cut quotas for AI product sales increases after many miss their targets. Microsoft denied the report, saying aggregate sales quotas for its AI products have not been lowered. And here's a look at the trading day across Asia, with China just heading off for lunch break. The yuan in focus after the PBOC said its daily fixing at a level significantly weaker than estimates. That's the most forceful signal since 2022 on an intention to tame the currency's gains. Chinese government yields rose off the back of that. And while authorities are trying to tame yuan strength, the Indian rupee has weakened past 90 per dollar. This chart shows the two currencies' divergence over the past year. Delays in concluding India's crucial trade deal with the U.S. have continued to dent sentiment. It's also driven the trade deficit to a record high as importers demand more dollars while exporters face steep tariffs currently in place. And Bloomberg Economics says the rupee's decline is about more than tariffs, with policy shifts and GST cuts also fueling the slide. For more, let's bring in Bloomberg's FX and rate reporter, Malavika Kormakol, who joins us from Mumbai. Malavika, we keep looking for that floor for the rupee, and we're not getting there, are we?
No, we're not. Not anytime soon. Like even today, we've seen the rupee depreciate and the RBI selling dollars to defend the rupee. I mean, the rupee is Asia's worst performing currency. And like you rightly pointed out, tariffs are one of the reason. The trade deficit due to gold and silver imports is the reason. The foreign exodus that we've seen from the stock markets is the reason. And we seem to be finding no floor to it, with the rupee just falling since the past couple of sessions.
It's like catching a falling knife, I suppose. You gotta question how the RBI is viewing the weakness in the currency.
Yes, I mean, the RBI is stepping in to intervene. We've seen them sell dollars, but the RBI has also made itself clear again and again that they're not going to target a level, that they're only going to step in to smoothen out volatility rather than targeting any specific level. And we've also seen them intervene a lot less, with a lot less force than they were before, like maybe, for example, in October. And that also suggests that there's an effort to sort of stem the drain on their FX reserves. India has one of the biggest dollar stockpiles in the world, and about 11 months, it covers about 11 months of imports, and analysts are starting to they're starting to mull that, maybe the fact that the RBI is a little more hands-off now also has to do with the fact that they want to protect these reserves in case there are any more delays in finalizing a trade deal with the US.
But is there a threshold? Is there a level that the RBI may just see the need to intervene and support more aggressively the currency?
Yeah, that's a really good question, and I feel that's a question that everybody's been asking, where's the floor? But we've already crossed a very closely watched level, which is 90. That was the level everybody was looking at. It's made people recalibrate their forecasts for the currency, but there doesn't really seem to be any sort of target that the RBI has in mind when it comes to the rupee. But they want to make sure that there's no abrupt moves in the currency. They smoothen out the volatility, so that, markets are not, super volatile on everyday basis.
I'm just wondering whether the Fed could play a part in this, with expectations of Fed rate cuts that could provide some support for the Indian rupee.
Yeah, I mean, that's a good thought there, because we have our own rate decision here in India tomorrow. And the expectations for the decision tomorrow have gone haywire because of this rupee fall that we've seen past the 90 level. The people who were expecting a rate cut as long as like yesterday don't do so anymore today. It's a little bit tricky now, because when you cut your rates, that also affects the currency. So it just becomes sort of a very fine line that they're going to have to balance here, because they do have the room to cut rates, like the RBI governor has said himself. But then you also see the rupee depreciating, at such a fast pace. So there's a fine line to tread here, and it's something to think about, the fact that, the Fed will be cutting. The RBI has said that it doesn't follow the Fed, but at its own rate decision tomorrow, it'll be interesting to see what they have to say about the currency and if the currency stops them from cutting rates.
Stuck between a rock and a hard place. Malavika, thank you so much for that. Bloomberg's FX and rate reporter Malavika Kormakol. Let's get market insights with Ankita Pathak, head of global investments at Ionic Asset. Good to have you with us. Ankita, your thoughts on how much pressure you think the RBI is feeling to intervene, support the currency?
No, Haslinda, good question and a very pertinent question. Now, there are two parts. Okay, so one, of course, is that INR has depreciated despite dollar falling by about 8.5-9% this year. This anomaly is primarily because of our own capital account suffering. So, FDIs have turned negative in the last 2 months. FII outflows of about $15 billion. Our import cover has fallen to one of the lows at about 7 months because of the rising trade deficit. So fundamentally, I think the rupee movement aligns with how the capital account has performed and therefore is a very, very valid move. As far as RBI is concerned, they are trying to intervene to control the volatility. They are not trying to target the level, which prescriptively is also a good move. In a time when your inflation is at all-time low, growth, and especially nominal growth, is suffering, rupee depreciation can act as a stabilizer for growth. And I believe RBI should focus on growth at this point. Once that comes in, rupee will take care of itself. So prescriptively okay for rupee to even go in this 88 to 92 kind of a range over the course of the year. And I think that will help growth than otherwise. And prescriptively, that's why looking forward to a rate cut from RBI, which can reflate the economy, which is pretty much needed as to where the India's own growth and inflation dynamics stand at this point.
Is it fair to say that despite continued depreciation in the currency, that fall has not been unruly and hence there's no reason for the RBI to be overly concerned?
I would say so. I would agree with you on that. It is a function of the fundamentals, as we just highlighted. It is the capital account that is really suffering. So India's net FX is depleting. There are less dollars coming into the economy that are going out of the economy. But having said that, in an environment like this where we don't have a trade deal, a depreciating currency actually acts as a support for exports. And I think it is a very good growth stabilizer. So I believe at this juncture, we always talk about central banks' impossible trilemma between, growth, inflation, and currency. The moment that we stand, growth and inflation will favor a rate cut. It is the currency which is creating a bit of a, hesitancy. But I believe focusing on growth and inflation at the moment is a good policy initiative for the long-term growth prospects of India.
But even as we talk about how a weak currency would support growth, there is such a thing as imported inflation, especially when you talk about how raw materials, crude, are priced in USD.
100%. And India's imported inflation basket is about close to 40-odd%. But last month, India reported an inflation number of 0.25%. So I believe that is less of a concern at this point. The current policy juncture that we stand at, we can digest a bit more inflation as we speak today.
So what needs to happen for the rupee to reverse its course? It is already the weakest currency in Asia year to date. Would it take Fed cuts? Would it take that trade deal or all of the above?
I think all of the above and more. So fundamentals need to change to begin with. And with that, I mean that what has happened in the last year is that, when dollar has weakened, money has flown into cheaper emerging markets. So you had China trading at 10, 12 times. You had Korea trading at about the same range as far as the forward PE is concerned. LATAM, again, in a very tight zone between 10 and 12 of forward PE. And markets have awarded flows into these emerging markets. India was still trading at a more expensive valuation, and which is why the net FII outflow has been tremendous out of India. So the capital account problem needs to be solved. Money has to, flow back to India. there could be two reasons as to how that could happen. One, of course, that India has seen a time correction per se, while it enjoys a premium over emerging markets. That premium is now lowest in a decade. So that could mean FIIs revert back to India. And secondly, of course, while most of the Asian peers have been, very active in being US tech supply chain. So whether we talk about Japan, Korea, and of course, China is doing its own AI race at this point. India has had none of these. So, but this quarter, India's earnings grew at about 13% YOY. I think the revival in earnings, the safe haven kind of trade could bring, FII interest back to India, and that would help the rupee. So for me, while Fed rate cut is important, while for more dollar weakness is important, I think solving of capital account with more money coming into India and in form of FII, FDI flows, I think that will be paramount for rupee to appreciate from here.
Ankita, some say that there's still value to be had in the Indian stock market. When you take a look at 2026, how should you be positioned for that?
Volatility, I think, would be part of India's market. And I think, some of the data has started to incrementally look better. High frequency data, if you look for the month of October, albeit it was, festive season back home, but the data is looking better as far as passenger car sales, two-wheeler sales, etc. is concerned. But at the same time, our nominal GDP growth is barely anything given how low the inflation has gotten, and nominal GDP is directly correlated to the earnings of the company. I would say India has seen a time correction. It does get better from here, but earnings will remain the key. And for earnings to revive themselves, we need to revive the nominal GDP, which goes back to my point that I started with, that maybe RBI will likely focus on growth revival at this point, because that will reflate the economy, which is otherwise suffering from lack of growth as we speak today. Outlook-wise, 2026, I think we'd be more optimistic than we've been in 2025. We've had a very cautious outlook on India in the year gone by, but 2026 incrementally looks better to us. We also think that, with Fed rate cuts almost given, change of governor ahead of us, and we've seen some early signs in 2025 itself, where S&P 500 has grown by about 16%, but MSCI ACWI ex-US has grown by about 26%. And we think this ex-US rally, dollar weakening because of the Fed rate cuts, will spark a EM rally in 2026. So we remain very, very positive on the emerging markets as a bucket per se. And India, of course, has not joined the EM rally in 2025. But if the growth is able to revive itself, I think it will do very well in that context.
How strong do you expect an EM rally to be in 2026? And despite looking at it as a bucket, I'm just wondering, are there particular countries that are likely to drive that growth?
Of course. Despite the run-up in the emerging markets in last, I would say, 2 quarters of 2025, some of these economies are trading at fairly cheap valuations. So you could still get like a Brazil at 12 times, a Korea at 12 times, a China at 13, 14 times at this point. There are different drivers to each of them. But I would say a basket approach would make more sense. But we like China, Korea, Latin America. And of course, India would probably at a slightly lower valuation would look more appealing to us, but as a basket looks good. Having said that, we are very cognizant that, if hard assets do well, which is going into 2026, if, oil, metals, miners do well, I think, of course, Latin America has a inherited advantage there, whereas, Korea suffers from being suppliers to US tech as far as the index is concerned. So our approach on emerging markets would be a more a basket kind of approach, but cheaper emerging markets, which are still trading at sub 15 times forward PE, remains our core focus.
And AI as well as tech will be key in supporting global equities, you say?
I believe that theme has more legs. Of course, the earnings of the theme is growing at 14-15% CAGR, which I think is a great number. And, we keep talking about, bubbles, etc. But we are also entering this 2026 on probably a rate cut cycle. So it's not a liquidity tightening cycle, it's a liquidity easing cycle, because of which I believe the US tech would continue, but would it continue growing at the same rate of return that it has given in the past? I think that's where my doubt lies. So if some of these, stocks have given 30-40% CAGR over the last 2-3 years, I think some of that will normalize now to about 17-18% CAGR. I think that is the view. Secondly, if we see chances of monetization not happening in this space, the elevated premiums of multiples that this space has gotten is likely to come down. At this point, markets have ignored, anything with value, anything which has, which doesn't have a suffix of AI, to put it out very bluntly. So I also believe rotation will happen into names which are, legacy software names, legacy enterprise names, which are trading very, very cheaply today compared to their, their AI counterparts. So while I think US tech would continue to dominate, the earnings are very strong. The rate of returns or the expectations of returns from the theme needs to be normalized. And secondly, some of the boring IT tech names have not really excited the investors, and that should likely change in 2026 per se.
There's still so much uncertainty out there, among them, the outlook for the Ukraine war, the outlook for oil, and also, the uncertainties to do with tariffs. Are investors actually underpricing risk as we go into 2026?
I wouldn't say the investors are underpricing risk. If you look at, bull-bear ratios, if you look at greed and fear ratios, the amount of pessimism in the equity markets, I think that has gone up, and that is clearly visible with what we are seeing in precious metal, right? So that risk of sentiment for investors is definitely there. It's leading for them, and I think the risk has been recognized fairly well. Per se, I mean, I think AI bubble I was looking is probably the most trending Google search as we speak today. So there is cognizance of, things going wrong among investors. So I wouldn't say they're underpricing it, but at the same time, as capital allocators, I think our job then remains to find opportunities which are still giving valuation comfort and which still has upside ahead of them per se. So not all your money needs to go into AI names. Some money should definitely go into businesses which are profitable, which are having solid gross margins, ROEs of 25 and valuations are fairly under control. These are the consistent compounders, and the sector rotation from, just anything associated with AI to solid moated companies has started in the last 2 months of 2025. I think this will extend into 2026. And secondly, a move towards, lesser recognized sectors, healthcare, consumer staples, utilities, etc. has also started to pan out in last 2 months of 2025, which again, I think will extend further into 2026.
Ankita, thank you so much for that. Ankita Pathak, Head of Global Investments at Ionic Asset. Plenty more ahead. Keep it here with us. This is Bloomberg.
Going toe-to-toe against anyone, the American technology industry has nothing to fear. We are mighty, we're fast, we're inventive, we'll take anybody on. In the case of China, we shouldn't concede the entire market to them. They're formidable, but conceding that entire market, we ought to go compete for it.
Nvidia CEO Jen-Hsun there saying he's still confident about U.S. AI dominance. Meanwhile, Nvidia is closing in on a big lobbying win. U.S. lawmakers have dropped a proposal that would have curbed the company's sales of advanced AI chips to China from must-pass defense legislation. For more, here's Annabelle Drewlers, our Asia Tech correspondent. Belle, how big of a win is this for Nvidia?
Yeah, well, it's going to be a huge win if it does come through, but essentially what we're hearing from sources here, because it is important to note that this hasn't actually been confirmed as yet, but what we're hearing is that, yes, Nvidia is on the cusp of securing what would be this big lobbying victory, essentially, because there's been a push by a lot of lawmakers in Washington to include the so-called GAIN AI Act into a larger package of a must-pass defense legislation that's set to be introduced on Friday of this week. So the GAIN AI Act, just to sort of give the context here, it's a bill that essentially would restrict Nvidia from selling. Well, first it needs to sell to American companies that want its chips, and only after that point, where no American companies say that they want the chips, then it can proceed to countries like China and other countries where there are arms embargoes in place. So really at the core of it, it's about completely restricting Nvidia from establishing networks for sales outside of the States. And that has, of course, been an issue for the company, because they're saying that if you do that, if you pass that legislation, then you're not allowing Nvidia to develop global networks as well. So you're just keeping the chips, because we know the demand is so high, it doesn't meet the supply. And there's a lot of demand already from the US hyperscalers, also Nvidia's other large customers, again, that are in the US. So this is a loss, or it would be a loss for the hyperscalers, those other customers in the US, but for Nvidia, it is a win.
And Bill, Jen-Hsun now saying he's unsure China will accept the H200 chips. Why does he think that?
Well, I think it's essentially it comes down to China's priorities around its policies, because the H200 is a more advanced version than the H20. They're both from the Hopper series, but the H20 was the chip that was initially designed for China, and then sales were restricted, and then they were allowed to restart, but then China was telling its companies don't purchase them. In this instance, we don't know if the H200 actually can be approved by the states for sales to mainland companies. But I think that's the big question. Again, would you face that same situation? Because China's modus operandi is to build up its tech self-sufficiency. They want to build out the semiconductor ecosystem. They have those national security concerns. So even if you can purchase from Nvidia those H200s, I think that is the key question. Do the companies actually want them? Will Beijing give that approval?
Well, thank you for that update. Still to come on the show. French President Emmanuel Macron has begun his 3-day visit to China as Xi Jinping makes a diplomatic push to isolate Japanese Prime Minister Sanae Takaichi. More details ahead. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. You're looking at live pictures out of Beijing amid French President Emmanuel Macron's visit. Of course, Macron visiting China for the 3 days. His visit, first visit in about 2 years now. It comes at a pretty critical time when trade has been upended by Trump's tariffs. You see both men at that long table over there on the verge of a signing ceremony, of course. China has been seeking support, by the way, from France in its dispute with Japan over Taiwan status, and China's top diplomat Wang Yi condemning what has been described as Prime Minister Takaichi's provocative remarks on the issue. But still, both sides looking to enhance trade relations. Macron's visit to China will include that bilateral meeting with Xi Jinping, set to discuss issues such as economic ties, trade tensions, and, of course, the war in Ukraine. Again, live pictures out of Beijing for where we're seeing Macron on a 3-day visit to Beijing. His visit, of course, comes at a crucial time. Macron has been instrumental in persuading the EU, by the way, to impose tariffs on Chinese EVs last year, prompting Beijing to retaliate with minimum price requirements on French cognac makers. Let's get more from our China correspondent, Min Lo. Min, Of course, we're seeing live pictures out of Beijing. What are we looking out for in terms of the readout that we'll get from both sides?
Yeah, I mean, you just saw the signing ceremony. I'm very curious what they're signing. I was just monitoring Chinese state media and they haven't given us any details. It'll be interesting to see what sort of deals have been signed. Of course, we know that Airbus, the head of Airbus is there accompanying Macron and that delegation as well. Well, it seems like they're very happy shaking hands there over that deal. And of course, there is the French cognac company, Remy Cointreau is there as well. Also Danone, the food processing company. I will be looking out for, of course, the size, the impact of any concrete deals that are being signed, as well as any tone coming out from the Chinese and the French readout, right? How strongly does China reaffirm this friendship with France? Of course, you know, Macron has in some ways been putting quite a bit of effort over the many years in the past to build this relationship with China. It is his first trip there in about 2.5 years. And if you recall, the last trip when Macron was in China, he made some comments that seemed to have suggested that France would limit its support for Taiwan, talking about how France and the EU shouldn't be getting involved with a conflict that has nothing to do with them. And I think this time China seems to be also pushing for some diplomatic support from France to stay on the Chinese side when it comes to its stand on Taiwan. I'm not sure they'll get that from Macron this time, because the last time when Macron made those comments, it really led to quite a bit of backlash from his European partners.
Of course, relations within the two are also being tested by other issues, not just Taiwan, Ukraine, as well as tariffs. I mean, where do relations stand right now?
Well, the tariffs have been an ongoing headache for Macron, right? Because those probe into French dairy and pork are still unconcluded. They are just, you know, a threat that is just dangling over Macron right now. And of course, it's retaliation for those EU tariffs on Chinese EVs, which France had been instrumental in shaping that conversation in the EU. And I think what's important as well is that France is preparing to take over leadership of the G7. It's hosting the G7 summit next year. So France certainly will be taking center stage in molding that G7 conversation, which so far has been pretty hostile towards China, right? Very much focused on those Chinese overcapacity, Chinese dumping of goods in France. At the same time, I think China will want to seek for better environment for Chinese companies. You think about Shein and how it has opened an offline store in France, but to a lot of controversy, right? There has been protests, there has been class action suits from French retailers against the company. At one point, I think the French government wanted to suspend the website, accusing it of selling childlike sex dolls, although that suspension has been halted for now. But there are a lot of issues regarding the friendliness of the business environment for Chinese companies and vice versa.
Min, it is a 3-day visit. We're hearing that Macron may even be heading to Chengdu. What do we know about his schedule while in China?
Yeah, I think that's an important point you're making, because it is not often that a foreign leader gets to meet with President Xi in Beijing and in another city as well, because President Xi is also going to Chengdu with Macron, and that gives Macron a lot of face time with Xi. And when you think about Chengdu, you can't not think about the pandas, right? That's where the conservation base is. So it is possible, this is not officially announced, but oftentimes when leaders go there, they go to have a bit of a panda diplomacy. But also Chengdu is a place where, you know, it's close to the Three Gorges Dam. There is a lot of cheap hydroelectricity there. That's where it is known for being an industrial base for aviation companies, for data centers, for biomedical companies. So they might be there to visit some important businesses in relevant sectors. Perhaps there might be some deals being discussed there as well.
Min, thank you so much for that. Bloomberg's China correspondent Min Lo. Meanwhile, Russian President Vladimir Putin is set to arrive in India later today for his first visit since ordering the invasion of Ukraine. The trip comes as sanctions and U.S. pressure seek to curb an energy trade vital to Russia and critical for India. Let's bring in government reporter Sudhi Ranjan Sen in New Delhi. Sudhi, what is expected from this visit?
Well, I mean, to begin with, India is rolling out the red carpet, and therefore there's going to be a lot of messaging, diplomatic messaging on the warm ties that India and Russia has and continues to have. That's going to be number one. Vis-a-vis deliverables, we are expecting, and this is what we are hearing from our sources in the Ministry of Foreign Affairs and our Russian colleagues who are here to cover the visit, it's largely being framed around an economic, it's the main focus would be the economy. That said, issues about defense and energy are going to be there. Mind you, Russia is still, despite a huge drop in defense supplies, Russia is still one of the biggest or the biggest defense supplier to India. So conversations around that. Deliverables we are expecting, one is that of a mobility agreement, which will allow Indian professionals to move seamless to Russia. And that's important because Russia is looking out for workers in there, and more so after the Ukraine war. There is a shortage of labor. So these are the kind of deliverables that we are looking at, and besides a lot of diplomatic messaging and a pomp and show to showcasing the warm Russia-India ties.
Defense high on the agenda, isn't it, Sudhi? I mean, what kind of deals, what expectations are there?
Well, defense always has been high on the agenda for India and Russia. As we know that Russia still is India's biggest defense supplier. Despite a drop, India is trying to move away, diversify its defense sourcing to the Western countries, France, Israel, United States. Being one of the notable countries from where India is looking out for. That said, what we have reported earlier is that there is likely to be conversation between the two leaders on stealth fighters and also on the missile defense system. And these are both very critical and very critical for India, and also very complex platforms.
It is a balancing act for Prime Minister Modi. I mean, even as it's looking to buy weapons from Russia, it's also buying from the U.S.
Yes, it is. And indeed, I mean, if you look at it, India has always kind of balanced its ties, and more so now with President Trump making it very clear that, it doesn't quite approve of India, buying Russian oil, cheap Russian oil, and, sourcing military equipment. In fact, 25% additional tariff has been, Trump has hit India with 25% additional tariffs to dissuade India from its Russia relationship. So in a way, this visit, India is also trying to use this to kind of message to the West that it has friends apart from the West and the United States. Mind you, the trade deal with the United States is still stuck. It's under negotiation. There are indications that it may come through soon, but there are no dates, there is no finality to that. So that will be used by, this visit will be used by India to message to the West. At the same point of time, Putin is going to use this to kind of message that despite being isolated, he's got friends in countries like India.
Sudhi, thank you so much for that. Bloomberg government reporter Sudhi Ranjan Sen in New Delhi. Let's bring you back to Beijing. Live pictures out of Beijing amid French President Emmanuel Macron's 3-day visit to the country. We have President Xi Jinping now making a speech saying that China and France will widen their pragmatic cooperation. Of course, it is an opportunity for both sides to continue the high-level exchanges. Xi Jinping holding a strategic dialogue exploring cooperation that has long defined relations between the two countries. Again, she's saying that China and France to widen their pragmatic cooperation. Let's get insights, perspective. Our next guest is a former diplomat and advisor on foreign policy who served as an official at the U.S. Department of State. Anja Manuel is now executive director of the Aspen Strategy Group. Anja, good to have you with us. Talk to us about the significance of Macron's visit to China.
Yeah, nice to be with you, Haslinda. And this, I would say, Macron's visit to China is important, but it's also part of the diplomatic normal visits that you would have. I think 2.5 years ago, your reporter said it, Macron overstepped a little bit. He was a little too excited. He said some things about Taiwan that he shouldn't have. I think he'll be very careful this year. If you read French sources, the French are particularly trying to shore up some business deals in China. They want to roll back on tariffs on brandy. They want to have a détente of the kind of tit for tat trade war that was going on between Europe and China. And I think Macron is also going to deliver a pretty tough message on behalf of himself and other European leaders that China should play a helpful role in bringing the war between Ukraine and Russia to an end. That'll be a difficult thing.
The question really is whether or not Macron can deliver hard words when he needs China in a big way.
Yeah, this is the problem that you have all over Europe. The European economies are quite dependent on China. China accounts for nearly half of France's entire trade deficit. So they need to get that under control. They really want French companies to expand in China. The French economy not growing very fast. At the same time, that war between Russia and Ukraine looms very large, and they really want Chinese help. I think it's going to be very difficult to get it on that particular issue.
Anja, we're getting new headlines now from Xi Jinping's speech that is ongoing live from Beijing. She's talking about China and France developing a more pragmatic cooperation, and that it should look at promoting a balanced development of trade ties. Balanced development of trade ties. Can there be a balanced development of trade ties, considering the fact that, you know, when you talk about those supply chains of critical minerals in particular, China dominates it, and France is looking for more from China?
You're exactly right. I mean, there is a lot of diplomatic speak in these visits. I think this is typical of that kind of speech and agreement that will be signed. The difficulties is that, of course, China hasn't changed any of the things that make it difficult for Western countries to do business with it. The massive overcapacity, the fact that they're leveraging their stranglehold on critical minerals and other things, and the fact that when Europe, for example, protested against the subsidies to EVs, China immediately retaliated by probing brandy, pork, and dairy. So there's a lot of tit-for-tat fighting, and I think you can see this as a détente, not a whole new era in China-French relations.
Of course, Taiwan is a key issue. It is front and center. China looking for support from France. In my conversation with the former Deputy Vice Minister of Foreign Affairs of Italy, this was what he had to say.
We see what China is claiming on Taiwan. We recently have Taiwan opening a second office in Milan. We have very good ties, and although the diplomatic ties are not there, but the trade is going well, and so I don't see following a foreign country telling us where to stand.
From the sound of that, Italy isn't likely to give that endorsement. What would France do? What would Macron do when it comes to Taiwan?
I would guess that Macron will be very careful on any statements on Taiwan. The situation around Taiwan has only gotten more complicated and difficult since Macron was last in China 2.5 years ago. There are ever more incursions over the central line of the Taiwan Strait. Chinese mainland cyber attacks on Taiwan. And I think the Europeans have really woken up to this threat and have been quite thoughtful and careful on Taiwan. So I think Xi Jinping may want assurances, but I think he's unlikely to get them.
How about on the issue of Ukraine? We heard from Taiwan's foreign minister calling China an enabler of that war in Ukraine. What stance might Macron adopt in his conversations with Xi Jinping?
I do think it's right that China does enable Russia's outrageous aggression against Ukraine. They deliver a lot of dual-use items, a lot of chips, a lot of the things that allow the Russian war machine to continue come from China. So they are not being neutral in this conflict. On the other hand, China has been helpful in the limited sense that it has told Putin in no uncertain terms that he will not use nuclear weapons in this conflict. And you haven't heard much from the Russians about that saber rattling with nuclear weapons since then. I think Macron will try and make a run at saying something about Ukraine getting Chinese help, and I think he won't get very far.
And Anja, speaking of the Russians, we have Putin making a visit to India. This is a relationship that goes back decades, but it does seem like they're dialing up their engagement.
Yes, this is a very important visit. So this is the first meeting of Vladimir Putin and Prime Minister Modi since that very uncomfortable picture of the two of them with Xi Jinping in September. And it comes at a time when the U.S. and India, of course, have had this big blow up, partly over how much oil India is buying from the Russians. And behind the scenes, very quietly, India and the United States are trying to patch things up. So I think Washington is watching this visit by Putin very carefully. Oil is a big issue. I know your correspondent talked about it. I can say a little bit more about that.
That's right. Do talk about oil. I mean, it still accounts for about, 30% of India's purchases.
It does. Before the war, Russian oil was really a rounding error in India's energy mix. And then after the sanction, India became Russia's second largest customer. I think at some point it became nearly 40% of all of India's imports. Now, China's imports of Russian oil are even bigger. The Trump administration has said this is a non-starter, this is a red line, and you have seen some of the big Indian importers, such as Adani and Reliance, ratcheting back their purchases from Russia, which I think is a very positive thing.
As much as we talk about how both sides are trying to engage with each other even more, there are challenges given the fact that India is engaging with the U.S. in a deeper fashion as well.
Yes, exactly. So India has a long-standing relationship with Russia and with the Soviet Union. I think your correspondent said that a big part of India's military kit comes from Russia. Now, the new kit they're buying tends to be more from Europe and the United States and less from Russia. That's a positive thing. Of course, India is a key part of the Quad, the United States, Australia, Japan, and India doing more and more military exercises together. And it's important to note that even in the middle of this blow up between India and the U.S., quietly, the two countries, the U.S. and India, signed another defense agreement recently. So I think their relationship with Russia is important, but ultimately India is becoming closer and closer to the United States and the Western orbit.
Does that mean that in the coming years, we might just see India pulling away even more from Russia?
I think a little bit, and you'll see it quietly and subtly. The Indians are very good negotiators, excellent diplomats. They definitely want to keep positive relations with both. But ultimately, India is worried about the threat from China in the same way that the United States is worried about it. They have to. China is the big behemoth power in the region. Russia is a declining power. So ultimately, what helps India is to be on the side with other people who are balancing out China.
Anja, as we speak, we're seeing continued headlines from Macron, who's on a visit to China. He says that France and China should cooperate more on Ukraine, and that strikes against Ukraine's critical infrastructure should stop. I mean, these are expected words. How might China respond to them?
My guess would be positively and in a non-committal way. I don't think there's any chance that Xi Jinping is going to really move onto the side of the West. I think it helps China that the West is caught up in this war between Russia and Ukraine. It's keeping Western capitals very busy. Of course, there's a lot of military aid going from Western capitals to Ukraine. I think Xi Jinping is in a pretty good spot. So he'll listen politely to Macron, but my guess is he won't do very much.
In the end, Anja, when it comes to Ukraine, Is the EU on its own?
No, I don't think so. There's been a flurry of diplomacy. I think a lot of people in the Trump administration just want the fighting to end. And so there's a little bit of throwing things out there, ideas out there. None of them have caught fire yet. I think it's good that they're trying. There's a lot of worry, as you know, in European capitals and with a lot of people in the United States that this initial peace plan proposed was very heavily favoring Russia. I think we backed off from that. But Europe is not alone. The United States has given substantial aid. More military material is flowing. Now, mostly that's what the Europeans are buying and then giving to the Ukrainians. But the U.S. is less in the fight than it was in the past, but still in the fight.
Anja, great stuff. Thank you so much for your insights. Anja Manuel, Executive Director at Aspen Strategy Group. Plenty more ahead. This is Bloomberg. Welcome back. You're watching Inside. You're looking at pictures of Emmanuel Macron, who's on a 3-day visit to Beijing. Both leaders, Emmanuel Macron and Xi Jinping, made speeches earlier. In his speech, Xi Jinping talked about how he's urging China and France to promote a balanced development of trade ties. He says China and France need to widen what he called pragmatic cooperation. Xi also talked about how China will provide $100 million of aid for Palestine reconstruction. In his speech, Emmanuel Macron talked about how France and China should cooperate more on Ukraine. He's calling for more Chinese direct investments into France. Of course, Emmanuel Macron on a 3-day visit to Beijing. Now, before we go, here's a look at our guest for tomorrow. We'll discuss private equity and get the outlook on China's healthcare sector with Jefferies. Plus, just ahead of the RBI decision, we'll hear from Axis Bank and DBS. Keep it here with us. This is Bloomberg.